Welcome back. Chip Nellinger as well as Arlan Suderman joining us this weekend. Arlan, got a look at those frozen beef, frozen pork stocks. Those pork stocks, we have the highest in 2 years. It kind of put some pressure on the markets. Do you think that's just a short-term pressure, or do you think this weighs on the market longer term?
Well, I think this concern is longer term, and the concern is the consumer and what's the consumer going to do. If you look at currency in circulation, you look at M2 money supply, you look at the what the banks are saying, the credit card companies are saying, the consumer is still cash rich, but the consumer is choosing how to spend that cash. They're generally coming down the value chain. Instead of buying name brands, they're buying more generic. They're buying fewer steaks, buying more hamburger, etc. And that's been affecting demand for meat, both on the pork and the beef side. Now, there are some positive signs going forward, but we're still looking at record pork carcass weights. We're looking at near record beef carcass weights right now. We need to be able to move through that supply. And when you look at the cattle, especially when we're slaughtering more cows than normal, we're slaughtering more heifers than normal, we're adding to that beef supply. And at some point, we're going to turn that corner and we're going to start holding back heifers and we're going to slow down the cow slaughter. And then we're going to have tighter supplies. The question is that going to be in the fourth quarter of this year? Is that going to be pushed to the first quarter of next year? And a lot of that's also going to hinge on the weather when we finally start getting some rains out west. And looking at the climate predictions center's outlook that came out late this week, it looks like the plains and even stretching into the western Midwest is going to be pretty dry this summer, especially in July and August.
Well, when you look at the seasonality of the cattle markets, Chip, I mean, typically you see the futures trend lower through these next few months, but it seems like, seasonalities don't really matter right now when it comes to these markets.
Yeah, I think that last week's cattle on feed report, the cold storage report this week, fairly bearish, and I think the cattle market handled it pretty well, given some bearish news there. If we can just get a little help from the cash market, we could see things turn. I think part of this is if corn does eventually make a higher high into summertime frame, or if there is some sort of a real threat and cut to yields, then historically, every time that's happened, you have to bring the protein markets along for the ride. So, very high feeding margins. We've spent time well over $9 in the Southwest Southern Plains for corn. It's really been a crimp on, not only hog producers, but cattle producers as well. And I think at some point, what Arlen mentioned is true. The economy, kind of slowing down a little bit here. High energy prices, really a weight on the consumer. But boy, from the production standpoint, if corn hasn't seen its highs, I think eventually, hogs and cattle, feeder cattle even, are going to be tied at the hip to corn if it continues to go higher.
Well, we talked about that domestic meat demand, Arlen, in our Farm Journal report, and it has held surprisingly strong, even with inflation, even with gas prices. Now, there are some warning signs, but even when we had this demand so strong, it didn't necessarily always translate to higher livestock prices for producers. So are the two tied together as closely as they once were?
Yeah, I think some of the question is also on the supply side. Are USDA numbers accurately telling us the supply? Maybe our cattle numbers are a little bit higher than what we thought they were. And we've certainly seen some discrepancy on the hog numbers, but generally they've been on the other side, been smaller than what USDA has been saying. And so all that matters when you're talking about narrow margins and being able to do that. But I think the real question going forward is still comes down to the consumer. We've seen some good solid export demand for cattle. On the pork side, we've really lost China for the most part and haven't been able to make up that difference. And so we're relying more heavily on the consumer now in order to get that demand and sustain that demand. And that's just a real concern. The consumer, as I said, has the money to spend, but they're choosing to spend it in different ways. And that's not necessarily been helping the protein sector.
USMEF actually thinks that pork exports, at least to China, have bottomed out for now. There's room for improvement here. But when you look at where exports are going and then booking feed costs, there's a lot of options to weigh right now, Chip, especially when it comes to feed.
Yeah, absolutely. Lots of problems out there, with profitability. Going back to the COVID low in the hog market, when we couldn't get enough animals, onto the chain through the system, there just wasn't the increase in production that you would normally see with those high prices. And that was, going back 18 months, 2 years ago. Now inflation's even higher. And so I think the back end of this looks good. I think to Arlan's point earlier, maybe some of the reason we haven't seen higher cash cattle prices has been the drought and the massive heifer and cow slaughter that you have seen for going on 2 years now. And once that slows, I think it does translate back into better cash margins for the producer. But the problem is getting from here to there because of this high input, high feed cost environment. It's really painful right now.
All right, Arlan Ship, thank you so much for joining us this Memorial Day weekend. We need to take a quick break, and then we'll have a special American Countryside next.